Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Peloton. Now, the latest quarterly report that just came out sank this company 35%. Now, should we consider it a buy? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your long-term and short-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is brought to you by Webull, which is an online brokerage and trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get 2 free stocks by using my referral link in my description below. So definitely click that link, open your account, and get your 2 free stocks. All right, well, Peloton provides interactive fitness products in North America and internationally abroad. It offers connected fitness products with touchscreen that streams live and on-demand classes under the Peloton Bike, Peloton Bike Plus, the Peloton Tread, and the Peloton Tread Plus names. Now, the company also provides connected fitness subscriptions for various household users and access to various live and on-demand classes, as well as the Peloton digital app for connected fitness subscribers to provide access to its classes. As of June 30th, 2021, it had approximately 5.9 million members. Now, the company markets and sells interactive fitness products directly through its retail showrooms and at onepeloton.com. Now, looking at the news that just sank the company right now, is the stock just plummeted a record 34% today. And it hit a 17-month low today, after the at-home fitness company reported Thursday's close that it swung a wider than expected loss for the same calendar quarter and slashed its full-year outlook, citing a pronounced tapering of demand. Peloton CEO John Foley said on the company's earnings conference call, "Now, from forecasting consumer demands to accurately predicting logistics costs, our teams have never seen a more complex operating environment in which to guide our expected results this year." Foley added that Peloton has seen traffic to its website taper off faster than the company was anticipating in recent months. Shopper visits to brick and mortar stores also were underwhelmed, he said. Now, putting even greater pressure on Peloton's profits, the company cut the price of its original bike by about 20% in August. Executives said Thursday that the reduction helped to accelerate bike sales, but that also means fewer people are choosing to buy its more expensive Bike Plus. Now, considering its revised 2022 outlook, Peloton said it's looking to make material improvements to its cost structure, which includes significant adjustments to hiring plans. Now, with the ongoing economic reopening and rising logistics costs presenting obvious near-term headwinds, we believe Peloton is likely to take a few quarters to get back to its feet. That's what analysts at the Truist Security said. They also said demand is coming in lower in all fronts, leading us to wonder when we might see a return on all the capital they have deployed. Analysts at the firm said in a note to clients, long-term, the connected fitness opportunity could still be attacked, but the path to get there appears more difficult. Now, Peloton now expects to have about 3.35 million and 3.45 million connected fitness subscribers by the end of June of this year, down from an earlier target of 3.63 million. So let's go ahead and look at some of the fundamentals of this company. Now, the stock currently is trading under $56 a share right now, $55 and change, with the market capitalization of roughly $17 billion. It ended fiscal year with $4 billion in revenue and negative $189 million in earnings. Now, the projected revenues for 2022 is approximately $5.34 billion with negative $665 million in earnings. And by June 2024, the revenue projections are $8.69 billion with positive earnings of $92 million. So by 2024, we're projecting Peloton is going to be profitable, but not anytime soon, right? On the positive side, you know, it's forecast to become more profitable over the next 3 years, with the earnings trend being positive over 2 years from now, which is considered above average market growth after next year. We still have headwinds. Now, Peloton does have negative return on equity of negative 10% as it currently is unprofitable. Now, return on equity is forecast to be high in 3 years' time, though, 25%. Now, looking at its financial position, the short-term assets of $2.8 billion exceeds its short-term liabilities of $1.2 and its long-term liabilities of $1.5 billion. Now, Peloton's debt-to-equity ratio of 47%, though, is considered really high. And then looking at the cash runway analysis, Peloton has sufficient cash runway for more than a year based on its current free cash flow. Now, shareholders have been diluted in the past year, with total shares outstanding growing by about 4%. And if they continue a negative trend, we might even see further dilution of their shares. So just be careful about that. All right, let me bring it back over here. And looking at the valuation analysis now, profitability, growth, and financial strength analysis, because the earnings of Peloton are negative right now, the price to sales and the price to book ratios are the most appropriate valuation measures. Therefore, Peloton seems highly valued with a price to sales ratio of 6.93 times, one of the highest in the leisure products industry, which is supported by a price to book ratio of 14.73 times. That is also highest in the industry. But we have to look at the psychology of things. You know, everybody knows Peloton. Peloton is the big gorilla in the room. Looking at the profitability analysis, losing money on an operating basis, Peloton has poor profitability characteristics in comparison to the leisure products industry peers. Now, while it's on par with the norm on a gross margin basis, it does a worse job converting revenues, profits on an operating and net margin basis. Now, looking at the growth rates analysis, it saw earnings decline in spite of positive revenue growth, and the revenue growth is supposed to be like, you know, inclining significantly, but the earnings are declining right now. So, and they've been declining over the past 12 months. Additionally, the average company in the leisure products industry has been able to improve its earnings result over the same period. But looking at the financial strength analysis, the total capital ratio of 32% is in line with the leisure products industry's norm despite its increases over the last year. Its interest coverage ratio is only 26 times, which means that it does not earn enough from day-to-day operations to service its debt. However, the quick ratio shows that the balance sheet can make up for this shortfall as there are enough liquid assets to satisfy the current obligations. So what do the analysts say about this one, right? The analyst consensus right now was a moderate buy in a 12-month price target of $93 a share, with a high as $140 a share and a low as $60 a share. But you know what? That I don't think they updated that. Those were, you know, yesterday's projections, and they haven't updated their price projections yet on it. So can't give you what most of the analysts say right now. I can guarantee you the price target of $93 has probably dropped down to probably $80 a share. Now, going over the few of the analyst reports, the CFRA report has maintain their hold position, but that isn't that kind of funny though, because yesterday when the stock was at $89 a share, they're like, oh, we have a hold position, and then now it went down to $56 a share. They still have a hold position. They said that Peloton will transition through 2022 to larger scale manufacturing and innovation, but they think that EBITDA and operating earnings will be negative through fiscal year 2022. They lower their price target by $30 to $100 a share over the next 12 months, applying a forward price to sales of 5.7 times above the direct peers, given Peloton expected higher sales growth. They lower their fiscal year 2022 earnings per share from $1.25 net loss to $2.30 net loss, in fiscal year 2023 from 90 cents profit to 35% net loss. Peloton has embarked on a lowering pricing of its entry bike to $1,495 on demand price elasticity, and began to sell the Tread for runners. Now they see positive earnings per share by the second quarter of fiscal year 2023 with wider realized margins, positive EBITDA, and sustained profitability. Now Peloton is expected to report a net loss of $1.14 for the first quarter of fiscal year 2022, absorbing the litigation and return losses on its treadmill. Now, since August 31st, Peloton is selling a new and improved treadmill, which management sees a 2 times to 3 times market opportunity in the bike market category, following fiscal year 2021 total revenue of $4 billion. Now, they estimate $5.1 billion in fiscal year 2022 and $6.5 billion in fiscal year 2023. Now, the Street Quant Ratings has a sell recommendation on Peloton right now. This is driven by a multitude of weaknesses that they believe should have a greater impact on any of the strengths, and that could make it more difficult for investors to achieve positive results compared to most of the stocks that they cover. Now, the company's weaknesses can be seen in a multitude of areas, such as the feeble growth in its earnings per share, deteriorating net income, disappointing return on equity, and weak operating cash flow, and generally disappointing historical performance in the stock itself. So am I a buy, hold, or sell recommendation on Peloton? Here are my thoughts. To me, this comes down to what do you believe people are going to do post-pandemic versus pre-pandemic. If you check out the charts comparing Platinum Fitness versus Peloton, that image is worth 1,000 words right now. It tells me people are preferring to go out and exercise at their local gyms versus staying cooped up at home with their own fitness equipment as the COVID lockdowns are lifted. Me personally, though, I have a dedicated fitness room because for me, time is money. If I were to go to the gym, it would take me 30 minutes to drive there and back. Plus, I would have to put on some real workout shorts and shirt and then 1 hour workout. I prefer to cut that 30 minutes drive and do other things with my time. One thing about the price subscription for Peloton, which is $39 a month all access, check out the price of the membership to Planet Fitness or any other local gym. It's going to be a lot lower and you get access to a wide variety of equipment and gym candy, okay? So I do not personally own a Peloton, nor I will ever own that machine. That's just my personal preference per se. I would never use the features, but I see the appeal that it has for a lot of the users. Now, I project that tapering of demand will continue probably for a few more quarters, then pick back up again towards the middle of end of next year. But that by that time, the global supply chain crisis should be under control. We can all hope that, right? I also see that more product offerings from Peloton would be great besides bike and treadmill. The elliptical machine has its benefits, and I hope that they add that, at least that, to their portfolio and other equipment to their portfolio products as well. Also, you got to look at the competition. Amazon recently came out with their new Halo Fitness brand, which features interactive home video workouts that pair with Amazon's Halo Fitness tracker. That's another type of product Peloton should be looking at to directly compete with. Now, Peloton came out with their own clothing line and apparel. No offense to Peloton on this one, but I don't own a Peloton, so I will not be buying Peloton apparel and accessories. I don't see much appeal outside of if you currently own one. To me, it's kind of like if you buy a Ferrari jacket without owning a Ferrari. To me, it's just something I wouldn't do. But it's definitely positive for the current Peloton owners that they get to say, hey, I got the Peloton shirt, shorts, and apparel. Now, don't get me wrong there. Now, looking at more than 5.4 million subscribers, the 9-year-old brand has some reach and teeth right now. Now, based upon all of that, I'm currently a sell recommendation on Peloton with a reevaluation toward the end of next year to see if they get through this slump. I only put a price target of $60 to $70 a share because I feel that they will not be able to overcome the obstacles in the near term. I would focus on the next few quarterly reports, specifically the next one that comes out, and to see if you start seeing a slowly upswing and then reconsider buying into Peloton for the long term. If they can, I would raise my price target to $80 to $90 a share over the next 12 months. But right now I'm at, a little bit about $70 a share. In my opinion, unless they start increasing product lines that compete with other companies, connected fitness products that are entering the market all the time, I don't have a strong long-term outlook for Peloton over the next year and a half. Now, the stock has a long way to go to prove itself. Investors should wait and to see if Peloton can sustain an upward move and build on a proper base before buying. The negative earnings per share will continue, and I have projections of it becoming positive by the end of 2024. But by the end of 2022, we should have a good post-pandemic view in regards to Peloton, but I cannot recommend this stock at this moment. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.